Hello, welcome to the Pad Pod, and today we're interviewing Matt Tristram, who is the co-founder and director of Loans Warehouse, and he's going to be talking to us about second loans. Hello, Matt. How are you?
Good morning. Yeah, I'm well.
Good. Now, first of all, for the audience, tell us a little bit about who you are and what you do.
Okay, so my name is Matt Tristram. I am co-founder and director of Loans Warehouse, a second charge and bridging brokerage that's been established for 18 years.
Right, okay. And what exactly, tell us a little bit more about second loans, second mortgages, second charge mortgages. They're called lots of different things, aren't they? Tell us a little bit about what they are, what we should call them.
Okay, so they have a few names.
Yeah.
Second mortgages, as you've said. Second charge seems to be the common one, or the classic secured loan. They, simply put, it is a loan where the equity in your property is used as security, which means you can borrow larger amounts over longer periods of time. So much longer periods than a personal loan, which goes up to 5 years, whereas a secured loan can go right up to 30. We are regulated by the same people that regulate first mortgages, because we are a second mortgage. And again, the loan is secured against the equity in your property.
Right, so it is a mortgage then, as opposed to a loan?
It's a second mortgage. So you need to have a first mortgage to be able to get a second mortgage. But it works in exactly the same way, but it will sit behind your first mortgage in priority order on the title of your property. Right.
So what kind of reasons then do people take out second mortgages?
Okay. So second mortgages, I do refer to them as all different names and literally in different contexts. So secured loans are the biggest, it's not the sexiest idea, but sexiest reason, but consolidation is the most common use for a secured loan. So somebody who has accumulated several credit cards, a couple of loans, and that could just be over a period of time, kids through college, just life improving properties, and they want to consolidate them all into one loan. It's not writing off any debt or anything like that. It's literally one loan that can replace several other loans, and about 70% of the secured loans that are written each year are either purely for consolidation or have some form of consolidation in. The next most common reason is home improvements. If you want to improve property, you're extending it, anything from a refresh, so new kitchen, new bathroom, to a full-on extension or loft conversion. People will often look at a remortgage to raise money, but they tend to be useful once every 5 years, because once you're in a 5-year fixed period, which people have done very much so over the last few years, you don't want to touch your mortgage. So a secured loan you can take at any point without affecting your fixed rate or existing mortgage. It runs alongside your current mortgage, and then when your fixed rate expires, many secured loans can be tailored so there's no redemption penalty at a certain point. So your 5-year fixed rate on your mortgage is complete, and then you remortgage, and then you can pay off the secured loan.
I see. So would you be paying off the two loans sort of out of your salary monthly together on the same day? So, right.
Well, not necessarily on the same day.
Right.
You can set the repayment dates, at any point that suits you. But yes, much like a mortgage, secured loans are based on your monthly affordability. So you have to evidence that you can afford the monthly repayments. They're based on affordability, equity in your property, and credit profile.
I was going to say that. I was going to ask kind of which people would be eligible for it, and what kind of people tend to, use these products. So do you have to have a certain amount of equity then in your property already?
You can lend right up to the maximum equity in your property. There are several, and that's not just small niche lenders. Some of the biggest lenders in the market, like Pepper Money and Interbridge, will lend right up to the equity in your property. Any homeowner, basically. Homeowner with a salary paying tax, or a taxable salary or income. So it can be employed, it can be self-employed, it can either be retired people who have private pensions, etc. But the main sort of clarifying thing is that you can afford the monthly repayments. So very strict rules around that, but much like there are with a mortgage, but it's a different income calculation. So just because you can't borrow any more on a remortgage doesn't necessarily mean you can't take out a secured loan. It's just a different calculation.
Right. And so people would come to you, would they, to find out how they could get a second mortgage, would they? And then you would look in the market for a provider who does that for them?
Absolutely. So we're a broker, so we have a panel of lenders that work for us, and our introductions come from people coming to us directly via our website to people being passed to us via price comparison sites, the big ones we all know. or via a mortgage broker. So someone might go to their mortgage broker as a first point of view. So, they've got a mortgage, they took it out a couple of years ago, they go back to their mortgage broker because their second child's now 2 and needs his own bedroom and they need to extend because they don't want to move. Mortgage broker has a look and says, you're on a great rate that starts with a 1 because that's what they did start at 2 years ago. If I remortgage you now, you've got £300,000 mortgage. You want £50,000 for an extension. If I remortgage you now, you're going to have £350,000 at a rate starting with a 4 or a 5. Or we can leave you £300,000 at a rate starting with a 1. You can take out a secured loan at a rate probably starting with a 6. They've never been closer in rates between a first mortgage and second, just for that extra amount. And then in 3 years' time, when you come to remortgage, you can either leave the secured loan in place or potentially remortgage and pay the whole lot off.
Right, okay. And have you found that with, everything that's been going on in the last 2 years, we've obviously had a cost of living crisis, really high mortgage rates, as you've just said. Have you found that more people have been using second loans for debt consolidation, maybe home improvements, things like that?
Yeah, a different type. So
right.
With the cost of living getting tighter, there's obviously certain people we couldn't help that maybe we could have helped before, and as rates drop again, we might be able to help them again. But what has happened with such a quick increase in rates over the last 2 years is you have got this new scenario where people are still enjoying very low fixed rates that they arranged 2 or 3 years ago, and they don't want to touch them. Because if you remortgage now and you're currently on a 1, how many people have sat there going, oh, my fixed rate ends in a year, my mortgage payment is going to jump up, so people don't want to do that. So probably the new reason that people are looking at a secured loan is to leave that mortgage in place at that rate starting with a 1 for as long as possible.
Yeah.
Let the fixed rate run to its full term, and they've been coming. That's probably the newest reason that's come to us, that's come out of this.
Yeah.
And what has happened in the last couple of years has actually probably been quite beneficial for seconds because of this whole new reason. You've always had the reasons to look at a second charge being that you can't borrow anymore on your first mortgage because your income won't allow it. As I say, we have a different income calculation. Or you are in a fixed rate with, whatever that is, with a large early redemption penalty, so you don't want to remortgage. But there are also people that maybe remortgaged a couple of years ago, but their income's changed now, so they can't borrow the same amount on a mortgage, so they look at a second. There are also people that might have had a real life event that's meant a bump in their credit rating. And while second charges aren't just for people with bad credit, and we will probably touch on this later, if you've had some bad credit history in the last year, 18 months, 2 years, there is a whole range of second charges that will still help.
That's good to know. You mentioned there's new reasons people are using them. There's probably a few new customers coming into the market, especially for you. As such, I thought it might be quite nice if we could do some myth busting.
Yep.
You sent me a few things that people sort of
common
maybe
misconceptions.
a few sort of misled about maybe when it comes to second loans. We're going to go through them and you're going to explode them.
Okay, let's go.
If that's
Boom.
okay. So the first one, you can get a second charge through your broker.
So, if talking like a mortgage broker, probably not. Most standard mortgage brokers will not offer second charges, but they will know who to refer them to. They'll have a relationship with a company like Loans Warehouse. So Loans Warehouse would be called a master broker or a specialist mortgage broker. We fall into that category.
Okay.
So most mortgage brokers either don't have permissions to do seconds or their network won't allow them to do seconds, but all networks and all mortgage brokers will have a partner that they refer to. Loans Warehouse has probably worked with over 1,000 mortgage brokers over the years that referred their clients onto us. We've helped them arrange that secured loan, and then when they're ready to remortgage, they go back to their original mortgage broker.
Right, okay. Myth number 2, the general public don't understand what a second charge is.
The understanding question. Second charges are not complicated. It's a mortgage that works in the same way as your existing mortgage. It's regulated by the same people. You are given advice by a qualified mortgage advisor. All our staff are qualified mortgage advisors. It's not so much that they don't understand it. Once it's explained, it's quite simple. There isn't the same distribution level. There isn't the same awareness of second charges.
Okay.
If you look at your own magazine, you will cover mortgages And then there are features often about seconds, but it's 90% mortgages, 10% second mortgages, which is due to the size of the market, 235 billion in mortgages last year to 1.5 billion in seconds. So it's a much smaller market. So it's just awareness. It's not a complicated product, or it's not complicated to understand. But it surprises me, probably because I've been doing this so long, when one of my friends will come to me and say, I want to pay off some debt. Don't you do loans? I don't quite know what it is. And you explain, and you're like, wow, there really is a lack of awareness in the market.
Yeah, hopefully this will raise that awareness.
Let's hope so.
Yeah. Number 3, second charge regulation is different from first mortgages.
Well, we have the same regulator. We are both regulated by the FCA, and overall, we're regulated in the same way. Okay. We have some different lending rules dictated by lenders, but it's the same regulation. It works in the same way. It's a mortgage that is secured against the equity in your property and is based upon your affordability, credit history, and income. Affordability, credit history, and equity.
So it's safe.
Yes, absolutely. It literally is regulated by, second charge is regulated by exactly the same people who regulate Barclays, NatWest, Santander, Halifax, HSBC, etc., etc.
The next one, high street lenders won't grant consent for a second mortgage.
Oh, this is one that we actually get this from mortgage brokers as well as consumers.
Oh, wow.
Absolute nonsense. Okay. So most mortgage lenders will put a restriction on your property when you take a mortgage out with them. But all we have to do is write to them with the customer's consent and say, please grant consent for a second charge, and then name of the lender. And they do it. 99% of high street mortgage lenders do this absolutely as standard, and most specialist mortgage lenders, they might want a bit more paperwork, but again, 99% of the time consent is granted.
So a customer could have their second loan with their mortgage provider?
Probably not. There are not many mortgage providers that your average client would know or have heard of.
Okay.
Most second mortgage companies or secured loan companies are funded by banks and building societies and stuff like that. And some of them are challenger banks. That was obviously something that happened in the last decade.
Right.
Some challenger banks, but they're not going to know the names.
Okay, yeah. So it's smaller companies that...
Smaller companies, compared to a bank or a building society, yes. Although there's, say, United Trust Bank, big second charge lender. There are banks within the sector. Pepper Money is a big specialist mortgage lender. They're the biggest lender in the second charge market, but it's not high street names. Yeah,
you're going to your high street bank to check that you have the consent for that second mortgage, but they wouldn't necessarily come in and say, we can give you one. No,
right. That's definitely not a problem they have. That was probably another myth years ago that banks wanted to use putting the restriction on as almost a trigger to contact the client. But no, that doesn't happen.
Okay.
They don't offer second mortgages. It's a specialist mortgage market.
Yeah, so that was just me getting distracted from the myths there and asking
No, go for it.
Let's go back to the myths.
I dispelled a myth of yours.
You did, exactly, yeah. Next one, secured loans are for people with adverse credit.
This, again, is quite an outdated view. So, yes, 100%, there are a whole range of secured loans for people who have had, I like to say, a credit bump or a credit blip, but people who've got adverse credit but can prove now that they have affordability and the income that will cover. Something's happened over the last 18 months, years. But probably last year, 70 to 80% of the secured loans that were written in the UK were granted to people that would be considered to have a clean credit profile.
Right.
They are not a product for adverse credit borrowers. Yes, there's options, but the majority of secured loans are written for people who would have a good credit rating.
Okay, and somebody would obviously go through the credit rating process, wouldn't they, or the credit checking process before they were...
Yes, we do that.
Yeah.
So if you approach Loans Warehouse, we will do a fact find, so we'll take you through a whole set of questions, similar to your mortgage broker will, some extra ones because it's a slightly different type of mortgage. And then we will underwrite your application. Second charge lenders have the full access to all the products of all the lenders that we deal with, and we will come away with the most suitable loan. A qualified mortgage advisor will then contact the client and go through the options with him, present the most suitable loan, give advice, and if the customer's happy with that advice, we will then send out the paperwork to them. And then we have a team, once the paperwork comes back, we have what we call a completions team. So a team of people who put everything together. If you need your property valued, we will arrange that for you.
Right.
If we need to contact the mortgage company for consent, we will do that for you. If you're self-employed, we will get your accountant to complete a reference, or we'll use your SA 302s, etc., etc.
That's so you can have them when you're self-employed as well. That will be
Absolutely.
pleasing to a lot of listeners, I'm
Yep,
sure.
there is absolutely no rate loading for self-employed. With the majority of lenders, self-employed are treated in exactly the same way as employed. And the second charge market has adapted very well over the last couple of years for self-employed. So traditionally, you might have looked at 3 years history. Now, go back 3 years, bit of a shaky time in the UK for lots of businesses. So the second charge industry as a whole tends to look at the last full year's accounts, and then they'll ask for maybe 3 months business bank statements so they can show that your accounts are showing that, and we can see that that volume of income is still continuing.
The next one, remortgages are quicker to process.
Absolute nonsense. No way. Not at all. Now, don't get me wrong, there are cases with second charges that can take a while because there's something technical to do there. But a motivated client can complete a second charge in a week.
Wow.
Nowadays.
Really?
It is, with that's not some sort of us bigging it up or any way, shape or form. And credit has to go to the lenders, especially in the last year. So we have always used desktop, I say always, as long as I can remember, we've been able to use desktop valuations instead of needing physical valuations. Okay. Probably now for about 70% of the applications we do. Consent is so standard nowadays that most lenders will complete a loan with the consent to follow, because you know it's going to be granted. So there's no delays there. And that historically could be a big delay. Mortgage lenders take longer to grant consent than we do to arrange the whole loan. HSBC, as an example, will take 14 days to process a consent request and then post it to you by second class. And they refuse to post it by first class. They will refuse to fax it, refuse to send it by secured mail. Bit of a bugbear of mine at the moment. But now that doesn't delay us anymore because lenders will complete without it. Lenders are getting rid of physical application forms. So we'll send a summary out to the client for their records, but they don't have to sign anything and send it back. 3 payslips, if you're an employed person, is the norm. So that's what we need from the client. Desktop valuation, don't have to wait for consent. It can literally sail through. And lenders are coming up with more and more ways to streamline the process and make it easier for the clients to not bog down in paper. Even things like used to do security calls. Every client would talk to the lender, which they can still do. But now it's EID. It's stare at your phone and say a few words and hold up your passport. So all these things are happening quicker and quicker. So secured loans are far quicker than a remortgage. And probably just to add one of the other things, there's a lot of issues with land registry at the moment. They fell behind during COVID and have never really caught up. A secured loan broker is far more proactive than the solicitor would be or the conveyancer would be on a remortgage side. We actively will chase land registry, get things prioritise, chase up requisitions, deal with solicitors for them, and we'll do the whole process for the client if there is that bump that needs to be overcome.
So do they not need a conveyancer? That process doesn't occur?
One of the main reasons why we're so much quicker is we don't have a solicitor who works 9 to 5 and works at their own pace. You've already got a first mortgage in place, so a lot of that requirement has been fulfilled already. Okay. There are different types of identification checks, and lenders will have a conveyancing firm they work alongside, sometimes internal, sometimes external, and they will do any of the registration that's needed after completion.
And how long does the desktop valuation take? Because that's where, just to explain to anyone who doesn't know, that's where the surveyor doesn't actually physically come round to your house and have a look. They do it based on information they have online.
One step further than that. We don't actually need to contact the surveyor. In the time it took you to ask that question, I could have done a desktop valuation. We put in your address. It's all a computer system. So we tend to use HomeTrack, which is owned by the people that own Zoopla. We will put the address in, the number of rooms, the type of property maybe, and year it was built, and it then kicks out a program which tells us how much the property is worth, sometimes gives a range, and it'll give a confidence level. So if you live in a street of terraced houses and there's been lots of sales, the confidence level is going to be sky high, and more times than not we'll be able to use desktop valuation. If you've got a detached house in a slightly rural area where people have lived there for a long time, there's no recent sales, chances are that we might need to do a physical valuation.
Okay. Right, last one. Second charges are too complicated to process. I think you've already answered that one, haven't you?
I have sort of answered that. And we are a specialist mortgage broker for a reason. We simplify it. I heard a really good phrase from someone from another brokerage a while ago. Secured loans are loans with more checks.
Okay.
That's it.
Yeah.
So they are not complicated, and a good second mortgage advisor will explain that process to a client from the start and work with them all the way through and guide them through and answer any questions as we go.
I think there's going to be a lot of people listening to this who either hadn't thought about a second mortgage or maybe did know about it but wasn't sure they could use it for their purpose.
Yeah.
So if anybody wants to find out more about Loans Warehouse, what do they need to do? How can they contact you?
Simplest, easiest way is go to our website, loanswarehouse.co.uk.
Wonderful. Thank you so much, Matt.
Thank you.
It's been a pleasure talking to you.
Lovely. Thank you very much.